Ever wondered how to see what's really happening in the market beyond just the price? What if you could track every trade as it happens, not just what's listed? Well, today we're talking about footprint charts, and by the end of this video, you will exactly know how to use them to spot real market movements. Footprint charts give you a sneak peek inside the candles you usually see on a price chart. While regular charts show price changes, footprints show you exactly what's happening behind those changes, what trades are actually being executed. It's like getting access to the market's secret logbook. So here's a quick story. Footprint charts were created back in 2002 by Market Delta and Trevor Horn. They were tired of not having enough information about what was really driving price movements. So they invented footprints to show you executed market orders. This was a big game changer. Now, to get why footprints matter, you need to know how markets move. Prices change when market orders are executed, meaning buyers and sellers agree on a price and make a trade. Limit orders, on the other hand, are waiting to be filled at a specific price, but they don't affect the price until someone matches them with the market order. Footprint charts show you these trades in real time, helping you understand what's really moving the market. This is a powerful tool for anyone who wants to understand the market beyond surface level price action. And hey, if you're still wondering how this all works, don't leave me hanging, drop a comment below. I promise I won't leave you on read. Alright, let's move on to footprint charts. Let's dive into the world of footprint charts. Sounds complicated, but don't worry, we will make it easy to understand. There are three main types of footprint charts: bid-ask, delta, and volume. The bid-ask chart shows executed orders, while delta helps you see the difference between market buys and sells at each price level. Simple rule: if delta is positive, more buyers than sellers are active. If it's negative, more sellers are in control. If delta is around zero, the market is balanced, no one's taking the lead. So delta is a powerful tool for spotting where market participants are the most aggressive. As for VOM, it just tells you the total number of trades at each price, no matter if they were buys or sells. Confused by all these technical terms? Don't worry, we'll break them down as we go. Now, sometimes looking at just numbers can be a bit overwhelming, so we have clusters, 7 different types to be exact. These clusters give you a clearer view of the market. For example, the volume profile shows the total volume trades at specific price within a candle. Market profile focuses on how long the market stayed at a certain price, while volume profile looks at how much volume was traded at each price level. You'll see terms like high volume node and low volume node. Don't let these scare you. They just highlight where the most trading action happens. The biggest node is called the point of control, which shows the price level with the most volume. There is also the delta profile, which is similar to volume profile but with a twist. It shows the difference between market buys and sells at each price level. It's perfect for spotting where the market is leaning towards buying or selling. If you want to dig deeper, there is the delta cluster profile, which splits the buys and sells into two columns: red for sells, blue for buys. This gives you a clearer view who's dominating the market. But now, you might be wondering, okay, but how do I actually use this stuff in trading? Great question. I will share my preferred setup. I use bid-ask to track executed orders and delta cluster profile to track buyers versus seller volume. And if you're really into customization, footprint bar statistics let you summarize important data like total volume and delta for each candle. The concept of imbalance comes into play when there is a big difference between buyers and sellers at different levels within a candle. Imbalance is calculated when one side outweighs the other by 300%, meaning market buyers or sells are 3 times greater than the opposite side. This tells you where the market is seriously skewed. So in short, yes, it might sound like a lot, but once you get the hang of it, footprint chart give you valuable insights that you can use to make smarter trades. Ready to take your trading to the next level? Let's explore how to use these charts in real trading scenarios. If you're enjoying the breakdown, don't just sit there like a limit order waiting to be filled. Hit that like button. So a short pause and let's summarize. Footprint is market sells and market buys that were executed against the nearest bid and ask. And this information can be analyzed in different ways depending on the type of footprint display, whether it's bid, ask, delta, or just VOM. And due to the huge number of variables, there are different approaches. However, today we will cover two of the most interesting, most reliable, and most tradable ones: stacked imbalance and absorption. Ever notice when buyers or sellers dominate several price levels in a row? That's called stacked imbalance and is a strong signal of supply and demand imbalance. It doesn't happen often, but when it does, it's a great opportunity to open a position as the price likely returns to your entry point for a profit. Pretty cool, right? Next, let's talk about absorption. Think of it as a sneaky strategy where large traders place a bunch of small orders instead of one big one to get the best price. When market orders hit these limit orders but the price doesn't move, it's called absorption. After this, price usually reverses, so watch out for that. To track these movements more accurately, traders use cumulative volume delta. Simply put, this tracks the net difference between market buys and sells over time. If it's positive, buyers are in control. If it's negative, sellers are. Cumulative delta also helps spot divergence, which happens when the price moves but delta doesn't, hinting at market exhaustion. Remember, using real market data is key. Platforms like TradingView don't provide the full picture, so stick to futures charts for true volume. After watching this, you might want to rethink your strategy. With the right tools and real market data, you can take your trading to a whole new level. So guys, thank you for watching this video until the end. Don't forget to subscribe, like, share this video with your friends, and till the next time.